Hello and welcome back to video number 2 in the Conquistador Beer case study, Opportunity Analysis. This is Finance for Entrepreneurs and my name is Justin Spencer Young. So let's get underway. I am suspecting at this point in time you have read the case, you've gone through the anguish of determining which reports you wanted to buy. And in your case, you had all of them, so you didn't have to physically buy them. You maybe used the data in the reports and you did some calculations and maybe you got frustrated. Maybe it was beautifully easy for you and you came to a conclusion. I'm not sure what your journey was like, but my experience is when I do this case in class, live with students, is often it's quite overwhelming. It's not easy. In order to determine if an opportunity is real, it requires experience. It requires some knowledge of where to find the data you need and what to do next. And I'm going to take you through this whole process right now. All right, so I'm going to switch in here my Excel spreadsheet. Here is our spreadsheet that we are going to do some calculations in. And you'll notice I've broken this into two parts. On the left here, I have the market share in dollar sales. And on the right, I have break even in dollar sales. Now, one of the things I suggested to you before you go and hunt down which reports to buy from Lawson & Associates is I suggested you try and identify the data that you think you might need in order to do these two calculations. So let me explain my thinking around this. I'll start with the break-even because I do think that's the easiest. If you Googled break-even formula, you would have come up with something that looks like this. Let's pick a picture here and see what it says to us. Here we go. Not quite easy to see this. This is the easier one. Break-even is the fixed cost divided by the gross profit margin. All right. So that sounds reasonable. There we go. We need to go and get some fixed costs and we need to find out the gross profit margin for Larry Gomez's potential business. So hence I put here fixed expenses and margin. So I already know that I need to hunt down this information. And we'll do a break-even calculation in a moment. As far as the market share is concerned, this is the part that I find with this case that many folks get quite overwhelmed. So I want to give you a little analogy that might help you with this information. If you were to be organizing a party at your house for some of your friends, think about the process that you might go through. You first might ask, well, who am I going to invite to this party? Is it going to be my close friends or is it going to be everyone I know? Okay, and that's quite important. And effectively what you are doing there is you are determining the population of people who are going to come to your party. And you want to know, well, how many people is this? Because remember, we're having to cater. We wanted to have enough beer available. The next step is then to ask, well, these people who I'm going to invite, let's assume it's our close family or close friends. How much beer are they likely to drink? And then you might think about, well, Uncle Frank there, he might have a couple of black labels, and Auntie June, she's definitely likes a Hunter, so I need to have some of those for her. And you might do some calculations about who will drink what. All right, the consumption of each person. We'll come back to this 3,78 in a moment. Now, market share. In the context of our party at home, if everyone was going to be drinking black label beer, well, then the market share would be 100% black label. But if you are trying to determine a budget for your black label, for your Hansa, for your Castle Light or your Bud Light or whatever product you're using, you would want to try and have to work out who is going to drink what beer. In other words, to get the proportions of the different beers that you need. Now, in the context of Conquistador, we definitely want to know what is the population of the area in which this franchise or this distribution agency is available. Then we want to know, do we have any information about how much do people drink, how much beer do they consume in this market, And then how much market share is Conquistador likely to get in this market? So that information is critical to us. And then we want to know, how can we price our product relative to our competitors? Now, I get this, that you might just be able to go down to the local bottle store and find out the price of the products. But let's assume that our market is halfway around the world and we can't get that information without buying a report. So you need to buy the price report. Okay, so there's all the information that we need. Now I'm going to start off by doing a break-even calculation, and I need to go and get the fixed expenses as they relate to Larry Gomez's business. So to do this, let's bring in the case. And let's scroll down a little bit. And what I'm looking for here is a list of expenses that are here. Here we go. Our fixed and semi-fixed expenses were estimated at, and here's the list, 204,000, and included in the paragraph above is a 450,000 expense for some salaries. All right, so we're going to actually add those two together, and we are going to assume those to be our fixed cost for Larry's business. So let's just put in here fixed costs of 654,000. 654,000 rand. And the other piece of information that we need is we need to find out some information about the profit margin. To do that, we have to go and look at report F. So let's come back to Larry and Associates here, Lawson and Associates, and just look at what report F tells us. Here it is. Financial statement summary of the wine, liquor and beer market for 1998. That is the year in which the case was originally set. And that's kind of what we need: financial information, composite balance sheets, income statements, relevant measures of performance provided for 152 similar wholesale operations. Okay, so we definitely need some financial information. So report F was a must. And if you went and bought report F, in your case you guys had it, but this gross profit margin was given in there as an average profit margin for this wine, liquor and beer industry. So let's use that for now. Let's use that, 19.7%. Now notice here on the right, I've got a little income statement going on here, and sales less cost of sales gets us a GP, less expenses, fixed expenses will get us a profit before tax. And this GP margin, my little formula here, has taken that number from there and plugged it in, and therefore this cost of sales, in other words the amount that you pay to the supplier, is 80,3. Take that decimal place out of there, and of course sales is always 100. The fixed expenses has been plugged in here under expenses. The profit has been made to be 0 because we are calculating break even, and at the point of break even, fixed expenses and gross profit are equal to each other. So mathematically that must be the case, because 654 minus 654 must get us 0. Here is our break-even formula. Remember, you looked this up. You went to go and see that if you took the expenses and divided it by the margin, you got the break-even sales. It so happens that GP and fixed expenses are the same. So if we just took the gross profit and divided it by the margin, if you look at my formula here, gross profit divided by margin will get us 3.3 million and some change. And I just took that number and I put it down there, and now I know Larry Gomez has to generate $3.3 million approximately in order to break even in a year. That's a good start. We're doing well. The challenge is now, is the market big enough for Larry to be able to support that amount of sales? Okay, so head across to the other side of our spreadsheet here, where we're going to look into find this data and do some calculations. So to start off with, we want to know how many people live in the area that relates to Larry Gomez, and to find that information we need to go to report B. In my case I've called it table B here, and in this data we were told that these are population estimates over the 5 Oregon counties that relate to the market area. So here's the entire population, but here's the population over 21. That's important. And in 1999, the population in this region was 45,500 people. So that's the data we're going to use. We're going to put it in here at 45,500. Okay, we know how many people. Now, next thing is I want to know these folks, how much beer are they consuming? To find that out, you had to buy Report A. And Report A told us about the consumption for the US in the entire population and the over 21s. And notice in the over 21s, the average consumption here is 35.7 gallons per annum. In Oregon, the average consumption for the over 21 is 46.8 gallons per annum. All right, so clearly in Oregon they drink a lot more. My understanding, it's a large student population in Portland, and part of student population and student life is they drink more beer. So that's why that is higher. I just did some maths. I prefer to think in liters. That's my personal preference. So I just immediately asked myself, well, I wonder how much 46.8 gallons is in liters. So Google was my friend, and I went and found a conversion. And it turns out there are 3.78 liters per gallon. So if you multiply this number by 3.78, you get a liters number of 176 liters. My own curiosity is how many liters is that per day divided by 365? And it turns out it's half a liter a day. It's about a pint of beer a day. So let's use the 46.8. Let's go back to our calculations. 46.8. So as a subtotal here, I'm going to say if you've got this many people and they're drinking this much beer, what you can calculate is the number of gallons of beer that gets consumed in this market. Now, I don't like gallons, I prefer liters, so I'm going to convert that by multiplying it by my conversion rate that I got from Google, and I'm going to find out that this is 8 million liters of beer per year. Now, that is all beers, but in our case, we really only want to know is what's the potential size of Conquistador beer sales in this market. So you had to buy the market share report. That was Report C. And they told us here that this relates to a different market. That's quite important. So let's come back here to Larry. Larry case study. Scroll up here to C, market shares. Conquistador market share based on total gallons consumed in 5 market areas estimated for these years. This data is projected from Conquistador's experience in California, Texas, New Mexico, and Arizona. All right, so based on other markets that are definitely more southern as far as the United States is concerned. Okay, so that's what we're going to use, 25%. There it is. Let's go back to our calculations here, and let's put 25% in there. And I want to work out what is 25% of our 8 million liters so that I know how many liters of Conquistador beer is being sold in this market. There we go. Now we're starting to hone this down. We've got liters of beer that we're likely to sell. But the next step is, well, what price are we going to sell these beers at? Or how are we going to package it? They talk about barrels and bottles and all those sorts of things. I'm not too concerned about that for now. I just want to find out what can I sell this for. All right, so hopefully you went and bought Report I. And if we scroll down here to Report I, it would have told us. So we wanted Report I, Surveyor Retail and Wholesale Beer Prices. And it's quite a pricey report. But we need to find out to determine the wholesale prices of these other products and how we can position ourselves relative to those products. Let's take that out. And if you bought Report I, you would have found out, I've got a whole lot of other calculations under here, but that's not important, that if we are in the wholesale industry, which is what we are in, these were all the prices for these different products. and I just calculated an average across all of them, and it got me to $3.01. And for the purpose of our calculations, I'm just going to say that the price here is $3. Now, pause a moment, because this $3 is the price for a six-pack. Is a price for a six-pack. That's going to cause some trouble for us, because this number here, this 2 million liters of beer, and this is in six-packs, we can't quite mix these two, can we? So what we need to do is we need to convert our liters of beer into six-packs. So let's do that. How many liters in a six-pack? It turns out, back in 1998, there were 330 or 340 milliliter cans. And if you take 6 cans of 340 milliliters, it turns out it's about 2 liters of beer in a six-pack. A simple calculation of taking the liters of beer and dividing it by 2 liters per six-pack, it tells us how many six-packs we have to sell in order to sell that amount of beer. And if you take the amount of six-packs and you multiply it by the price, we now have the revenue that can be achieved in this market. Okay, great job now. Now we have two numbers that we can compare side by side. Potential sales in the market and sales needed in order to break even. And just notice how the market size is less than the amount of sales required in order for Larry Gomez to break even. Let's not rush to any conclusions yet. Let's think through a few things. First of all, I'm going to go back to this margin here, 19.7%. I'm always cautious about the source of the data and whether it's accurate enough for us to be able to use. If this margin was for liquor, wine, and beer, I think it's going to overestimate our profit margin, because typically beer profit margins are lower than wine and lower than liquor. So this is slightly elevated. It might be appropriate to say a more suitable profit margin here could be, say, 15%. And if that's the case, what's going to happen here is, wow, just a couple of percentage points. Look what that did to our break-even sales requirement. That's quite a lot. So that might just frighten you. So we might say, okay, well, let's make this, 18%. Maybe you can stomach that. All right, 18% instead of 19.7. At the end of the day, we might not know exactly, but we are just estimating for now. So let's go with that. Then I'm going to look at some other numbers here. The population I'm pretty happy with. The consumption seems okay. My problem here is with this 25% market share. If this product is getting 25% market share in the southern states, which might be closer to its more traditional market, I'm not convinced that we're going to get 25% straight out of the gate in our first year of business. This is a complete overestimation of what we are likely to achieve. And in fact, I'm going to suggest we will do well if we even got 10% market share in our first year. So I want to lower this number. And this is the make or break of this case. Don't get misled by the wrong information. You'll see here, $1.2 million is now the actual size of this market. And now when you compare these two, I think it's very clear that there's no real business opportunity here. Larry Gomez can't support making these sorts of losses for any period of time, even if he thinks that sometime in the future he might be able to grow his market share or perhaps increase his price. I don't know, maybe people would drink more of his product than others. That's probably unlikely. So this market share issue is a big deal. In order to grow this market share, think about what Larry Gomez would have to do. If we come across here to the income statement, he would have to spend a whole lot of money in marketing and advertising in order to create awareness of his product. And if we increased this in order to gain that awareness, and maybe this thing went up to $700,000, then what we can see here is this break-even point just gets higher and it's more difficult to break even. And that's the trade-off that Larry would have to make. Whether he can ever get this market share up, and even if you got it up to 12% or 15%, we can put in different numbers here. We could try and find out at what point, maybe at 30%, does he become profitable. Not quite. It might have to be 35% market share in order to be able to come at least profitable. And that to me seems unreasonable. Okay. So that's an overview of the market share and the sales and the break even, and I think the conclusion is quite clear. I do want to share one other perspective with you. And I'm coming here to my calculations around the balance sheet for Larry's business. And what I've done here is I have just put in a sum of the fixed assets that they suggest in the case that might be needed. And that's about $1 million, a little bit higher. A few other assumptions I've made. Larry needs some inventory, 45 days worth of inventory. I think his customers might take 2 months to pay him. So I worked out 60 days of debtors, in other words, unpaid invoices. And he needs to have some cash on hand in order to pay ongoing expenses from time to time. All right, so these current assets are $915,000. And then he may have to pay his suppliers over 30 days. So that's some benefit to him. That's going to help him. And the net asset requirement in Larry's business is going to be a little bit higher than $1.7 million. Now, as it turns out, in the case, they told us about these 3 sources of capital that Larry has. And you'll notice it's 1.7 million. It's a little bit less than what's anticipated that he will need. So therefore, he's actually going to be short of cash, and he doesn't have the leeway or the runway, as we might talk about, in order to make any losses. He has got to be making money from day one. And that's going to be a real challenge for Larry Gomez in this business. Remember, he's an entrepreneur. He doesn't have a big corporate daddy looking over his shoulder with lots of capital to provide with him. He has got to make this work using funding that's coming from fools, family, and friends, the famous 3F source of funding. So that brings us to an end. There is the opportunity screening for Larry Gomez's business. And the framework here is, what is the size of the prize? What is the size of the opportunity? And how much revenue do you need to survive? And compare those two. It will tell you a great deal about your opportunity. And depending on how much cash you've got, tells you how long you can survive until you make the money you need. That brings us to the end of the Conquistador Beer case. I hope you enjoyed this, and I look forward to sharing with you the content in the rest of the Finance for Entrepreneurs course. We'll see you later.